All right, so now we're going to go over the basics of market structure for those that are new to market structure and how to use market structure for direction. So you always want to start on the higher time frames. You can even look at the weekly if you want like a big analysis of everything. So we can see here on the weekly that gold is fairly bullish. We do have a pullback in that bullish range, and that's what makes it an uptrend. It has a high, a lower high, and this is potentially going to shoot all the way back up. Potentially. So we can see that gold is fairly bullish right now. And what makes a trend bullish? Like said in the break of structure versus liquidity video, when a trend is bullish, it's having a high in the market. It's having a pullback either to the middle or optimal trade entry, which is lower down in the discount. So if we have a high in the market, lower down is the discount. It's like going to the grocery store and the price level drop and it's on discount. So this is the premium, this is the discount. So price either comes to equilibrium of that move or it comes to the discount of that move, creates a lower high, but it does not break the low. Sometimes it can sweep the low, leave a wick lower, and then continue high. That's called inducement. When we come, we take liquidity, but we're not breaking structure or changing trend, and then we continue higher. So price can sweep this low, leave a wick under it, but not close below it. That means the trend is still bullish. But if we close below this low, that's what makes it bearish, and that's called a market structure shift. So this is a high. We have a lower high at the discount, and then we break the next high with a fully closed candle in a strong candle, and that's what creates an uptrend. Maybe this high might come, a little higher or rejects a little higher in this range. Sometimes it comes a little lower in the range, but as long as we're not breaking the previous low and closing strongly below it, this is still an uptrend. And then we're breaking the next high. Let's look for some examples here in the market. And yes, it does look a little different on candles. We have a high here. We closed above the high, so we can automatically assume that we're going to continue higher. This is the weekly time frame, by the way. We have a high here in the market. We did not close below it. We didn't even come near the low. And then we eventually broke and closed. Actually, this is not considered a higher high yet because we still have wicks in the market. This would be considered when we broke structure and we could possibly just shoot up from after breaking that structure. Here we have a high, lower high. We never broke any lows, and that's what makes an uptrend. Now, what makes a downtrend? Quite the opposite. So you have a high, now you have a lower high. Now we can come back into the premium and then drop, or we can come back into equilibrium and then drop. Sometimes we just might not come into either one of them and just drop after that. But we're never breaking any highs. Lower high, lower low. Coming back into either the premium, equilibrium, or right here. Lower high, lower low. We're going to fix this a little bit. But as you can see in our downtrend, we do not break any highs. We do not break the top of anything. And we can see this in the market here. What do we have? A high in the market. We have a lower high. We did not even come up to this high. And like I showed here, we didn't even come back all the way up into the premium. It doesn't even look like equilibrium. I do have a Fibonacci video if you guys want to check that out, where you can see equilibrium. Okay, we did come into equilibrium. We came right into equilibrium, rejected at equilibrium, created a lower high. So what can we assume from this area? We're going to create a lower low. We're probably going to come break this wick, which we did come down and do. We swept it at first. This is a sweep, potential reversal, which we did shoot up. And then eventually we continued the trend a bit and we came ultimately closing below this level. So now this is a lower high. But we want to look at the ultimate trend. We're literally having a minor pullback in an uptrend. This is just a minor pullback. So what is the dominating trend? It's buyers. So looking at the whole trend, we then go down to the daily. What are we doing on a daily? What is market structure telling us? Okay, so we have a few highs in the market. This is a high. From this high, we have a lower high. So this was fairly bearish, but what did we not do? when we came down after this high, we did not, we did not close below this low. And how do I know we didn't close below this low? Because we have all of these wicks that are still intact. If we close below it, the bottom of these candles would have been under the wick. That'd have been confirmation of a downtrend. But what did we do instead? We came down, we wicked out in the same area, rejected this same price level, as some of you may call it, a support, instead of breaking it. So this is a failed downtrend. We can assume that this next high is probably going to be a failed downtrend as well. We came lower, we're holding bullish momentum, we're failing to break lows, but also we're failing to break highs. And that's kind of where the hourly auction model still helps out, because right now we're just chopping around, but if you're using the hourly auction model, you can target draws on liquidity in this chop. You can see how each hourly is forming compared to the previous one and understand what it's probably targeting. So if we saw this bearish candle here, but we don't have a clear trend because we're just consolidating, or we're going to use something over here. We don't have a clear trend because we're just consolidating, right? And we have this bearish structure, and then in this bearish structure, we created a giant wick. We did not break a low. What is that showing us? That this is not bearish. The only way it would be bearish is if we broke this low and closed below it. So this is considered a sweep and not a break of structure lower. So I'm going to take my little arrow tool. We have a high, failed low. We did not close. Price closed up here instead of below here. We created a bullish candle. What can we do from there? We can assume that this next candle is going to open bullish, and we're going to wait for a reaction within this bullish candle. So as soon as this candle opened here, I would have waited for it to manipulate inside of this bullish candle or inside of the bottom of this wick, and then show me it wants to flip. It did not flip. It did like it push up, and from there you could target a draw on liquidity. So using this bullish candle, what can we target that's higher? I see on the hourly, we have this hourly fair value gap. Okay, boom, failed downtrend. We're holding bullish. How do I know we're holding bullish? Because we did not close below this low. This is not a break of structure. This is a wick. So we're holding bullish. We have a bullish candle. Manipulate it within that candle. Use that candle, the body of this candle, to hold buyers, to dominate, or sorry, the body of this candle showed that buyers are dominating the market at that moment in that specific hour. So we can assume that this hour wants to continue that momentum after just sweeping a low. And so what did we do? We used the body of that candle in that failed breaker structure to what? Target this high. And so if we drop down a time frame, we was using that 5 minute. We were using that hourly candle to target that high. So we could drop down to the 5 minute after that. Let me find my chart here. So having a fail break structure, showing bullish structure. What do we want to see? We want to see a inverse price leg. We want to see something that shows that all the sellers got wiped out and that we could continue back up to this hourly gap. And so what do we have here? Within that area, we have this bearish leg of price action. Price closed very bullish in this bearish leg of price action, showing that price most likely will continue higher. And if we go to the 1 minute, I'm pretty sure there's probably 1 minute fair value gaps within this 5 minute candle. So boom, we could have used that candle. And I think I actually took this position. I'm not too sure. Use the candle. Price should not continue to the bottom of the inverse price leg. And then we could have targeted that 1 hour fair value gap. And that's how you use breaker structure, market structure to find your target. You're using market structure to find direction. Are we making higher highs, higher lows, or did we sweep below and we're, going towards something higher? Or are we making lower highs, lower lows, and did we sweep a high instead of break a high? So it's honestly understanding whether we're breaking and closing strongly above a high, or sweeping it and leaving a wick, or whether we're breaking or sweeping a low. So understand the direction of the market and if it's an uptrend or downtrend. So kind of to go back over that, what's considered a sweep? If we have a high, We got a lower high. We broke this low. We could assume that we were going to go lower, which we did. We came lower. What did we do? Instead of breaking this low down here, we created wicks. We never broke and closed price below this level. So now we swept this level with a wick, never closed price below it. You always want to see where price closes. That shows you where it might want to go after that. Because if it closes strongly in an area, they like that area and they're probably going to push in that area. So understanding where price is closing, understanding if we're going to hold that level or not, and we can use that to determine market structure. So from that example, what do we see? We saw some temporary bullish structure. This is the 4-hour now. High, higher high. Now this is a good example. I actually took these shorts. This is a good example right here. And time is fractal. You can see the same thing on all time frames. We got a high right here. Okay. Let me delete this one. We have a higher high. Sorry, I'm trying to delete this one. Okay. We have a high. This is a higher high. But here's the trick. We have a giant wick here. This is the high of this move. This wick high is the high of this move. Not this. This is the high. What did price do? We had a quote unquote breaker structure, which probably would have got a lot of people. This is not a breaker structure. This is a sweep because the high of this move is up here. This did not close price above this high, meaning this is not an uptrend. This is a sweep. So instead of creating higher high, price closed above the highest high of this move. We had a higher high. This is a fake high. This was actually a data high. So this was a draw on liquidity. We swept that level and then we completely reversed from there. And so what did we do even in this area? We broke a low. And because we're consolidating, we're just breaking highs and lows. It's not really making much sense. So that's when you understand that we're in a consolidating market. But you can see like small trends within the consolidating market to get an idea of where price might want to go in that specific area. So we broke this low. So I'm automatically assuming from this, okay, price closed below this low. We might do something bearish after this. So I'm waiting for price to manipulate higher. I'm looking at my candles and I'm waiting for something bearish to happen, which we did get. We created a bearish structure. We could have targeted this low. And what did price ultimately do? It took that low. It took that low, but it did not close below it. So using the same concept, okay, we didn't close below the low, so it's not a downtrend. We can target something higher, target the next high. What did we do? We came and we took the next high. This was a sweep. So being careful with this, and then ultimately we ended up closing above this wick high, showing that we are in a bullish trend. It was the confirmation that we're in a bullish trend. When we closed above this high and held structure, sweep of a low, we did not close, break a structure higher, which we got up here. And we probably could have assumed that it was going to be a break of structure or an uptrend when we had this strong bullish candle showing a lot of buyers. There's almost not even a top wick. So high, failed low, failed to break this low, so there's no downtrend. Higher high, this failed to break this high, so we're being very, very careful right now. We don't know what's going on in the market. We're just consolidating. We're targeting draws on liquidity. I probably would have taken these shorts. After we swept this high. It got stopped out. And then what did price do after that? It shot up and it closed all the way up here. Now we closed above a high. We closed above another high. This is an uptrend. And when candles show strong bullish displacement, there's a high chance that that next candle is barely even going to retrace. And that also comes with the candle reactions. So what did we do? Strong bullish structure, closed above it. What did this hourly candle do? We manipulated into the strong bullish body of this candle. Right here, we manipulated into it and then we pushed up higher. We came back lower a little bit again. So we could have assumed that because this candle failed to push lower and it opened up, we could have assumed that the next hourly candle was going to shoot up, holding longs to those draws on liquidity, which are these highs in the market, that's where liquidity sits, which we did sweep right here and came down lower. But then I see that we closed above this area, showing that this is bullish still. Now, if it just held this wick and then pushed down lower, now we're bearish. But we came, we swept this level, had minor manipulation there. And then we came and we closed above this level, showing that the buyers are still in control. And that is market structure simplified as much as I possibly can. If you do have any questions, I can simplify it even more. And we can go over it. But that is how I view the markets when I first get on. And from doing it so much, I can just like automatically see the trend. I can automatically see if we swept or broke a high. I see this high, it got broken. Price closed above it. That's a strong high. We're displacing back higher. This is nice longs. This is nice longs to take. It's following the uptrend. And what we target from there? Everything higher. We had equal highs right here that we swept. We kind of rejected. Now this candle is showing that it wants to continue higher. So what can we target after that? We have this high in the market. That's an area of liquidity. We could either reject or break it. This high and then this high. And using the overall trend to understand that we're probably going to continue higher. Probably going to continue higher. So that's how you identify market structure, identify trend and direction in the market when it comes to higher time frames. And that's how you're going to get direction when it comes to trading that specific hourly candle. Okay, boom, we're in an uptrend. This candle is most likely to do something that manipulates higher. It consolidated here for a bit. We failed to, this is a good example. We failed to break a low. So if this was trending down in the moment, it would have broke the candle low, this wick low right here. It held this bullish wick. It did not close below it. It didn't even sweep it. It held the bullish wick. So we had a strong bullish body here, just hourly manipulated into this bullish body. Came actually really low in it. That's one of our candle theories. And then this candle displaced higher and flipped. We could have entered a buy off of this candle flipped, go on to the 5-minute, looked for a inverse price leg, which we got right here. We inversed all these sellers right here. This selling candle got inversed. On the low time frame, that's a price leg. Yeah. This is a entire selling price leg. Seller, 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 seller. Completely inversed. This closed above. It's all the same on all time frames. It closed above this level, showing buyers are under control, and then boom, we have displacement higher. So that's how I kind of look at the market and market structure when it comes to these time frames. And in my previous video, I stated that this could possibly continue lower because what did we do? That's why we have to be very careful and look at reactions and candles. What did we do earlier? We swept the wick of, or the high of this wick, and price literally dropped all the way down here. We swept the high of this wick, came into the middle of this wick, and price rejected down here. So we had a potential reversal as well. So I was also looking at the counter reactions to the previous bearish candle, which we completely inversed and held very strongly here. So if this candle was bearish, it would have came and then it would have closed down here. And then the next candle probably would have manipulated into that bearish candle and then dropped. But instead, we closed up here and we could target all the draws of liquidity that's higher. This wick high, this wick high, this wick high. You do not want to go for home runs. You just want to get your piece of the pie in the market. And that's how you identify trend. That's all for this video.